Hi and welcome to the latest edition of Talking Bull. It's the 20th of December. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, good, thank you, mate.
Into the 20s of December. It's getting close, isn't it?
It is very close, yeah. Got to start doing some shopping soon, I think.
That'll be handy, wouldn't it? um, Bit of a present offered by the old BoJ overnight. We'll come on to that in a moment. But
Yeah, it looks
yeah,
like it.
some pretty mad swings in certainly a few markets, and we'll get onto those in a minute. So let's just do the headlines first of all. To get an understanding of what's happening. So first of all, we had stronger than expected German IFO data yesterday. The business confidence index strengthened to 88.6 for December from a revised number of 86.4, which is also above the consensus forecasts. We had some weak US housing data. The NAHB housing index slipped to 31 from 33 previously, which is below the expectations of 34 and only just above the lows recorded in an immediate response to the initial 2022 pandemic. Overnight, the Bank of Japan adjusts its target band. They held interest rates at minus 0.1% following the latest policy meeting, which was in line with expectations, and the target for the 10-year bond was also held at 0%. There was, however, a limited policy adjustment with the permitted ceiling trading band for the 10-year yield increased to 0.5% from 0.25%, and there was a sharp bond selling after the move, with the central bank having to intervene aggressively to cap yields. As a result of all of this, the yen surged on the Bank of Japan move. Following that move, there was heavy yen buying. Dollar yen slumped to a 4-month low below 133.00 before stabilizing, while the yen surged on the main crosses with euro yen below 140.5 before a tentative recovery. US yields moved higher despite the weak US data. Treasuries lost ground with a solid increase in yields to near 3.6%. And there was further increase in yields following Tuesday's Bank of Japan move, with the 10-year yield around 3.67%. Further retreats in equities. We saw more selling yesterday and more as we come into this morning's session. The combination of fears over the US and global outlook, coupled with higher yields, triggered further selling pressure on Monday. The Bank of Japan move and higher bond yields has triggered a fresh wave of selling today. So let's get into some charts, shall we, Steve? Let's
Yeah.
kick off as we usually do with cryptocurrencies, and you can talk us through what's happening there.
Thanks, Joe. Yeah, let's take a look at the daily chart quickly. There's not really a lot going on in Bitcoin at the moment. We've retreated from the resistance level, or the band of resistance that we've got. We got up to just below 18,400, moved lower over the last week, and this morning we've had a bit of a recovery. We had a bit of a sell-off yesterday, broke through the support level of around 16,500, moved down towards 16,300, just below there, and then we've recaptured all of yesterday's gains already. I know it's early in the session and this may just be a little bit of a blip, but yeah, nice little bounce back, nice little formation on the 4-hour chart. We got a bullish engulfing candle there, and let's get rid of this band because that just looks a bit confusing to me. We still have resistance around these levels, previous swing lows, etc., just adding to difficulty for this Bitcoin to rally. Still, for me, it's a bearish market, even on the shorter term chart. Now the 4-hour chart, we're below the cloud. That shows you that where the resistance is in the shape of the 4-hour chart. So any rallies, I expect them to be sold into, especially if the indices is on the defensive. Now, if the indices are able to turn around, then it may be a different story. But at the moment, negative on crypto. Looking at commodities, the one real interesting market for me is gold. We've stalled. Obviously, we had a double bottom formation, which we rallied from. I'll just remind you of that here. Actually, the weekly chart will show it a bit clearer. Double bottom formation, measured move target is up around 1844. 4-hour chart has, we've had the rally, had the pullback to support levels. We've posted a higher low now, and we're looking to march on, and we're looking to take out the resistance around the Ichimoku cloud. This does come with a number of resistances. The previous one of 1810. We've got the 1800 psychological level. We've got 1805 swing high. but obviously the main one I think would be a break of 18.15. If we take out 18.15, we should quite easily take out this swing high from the shooting star candle. But that's the dominant candle at the moment. But as I say, short-term chart looks to be showing a bit more promise. As it would do in silver. Silver was still in the midst of an inverse head and shoulders formation. We've projected lower over the last week, but we found good support in front of this band of support around 22.50 and reacted higher from there, and looking to take out yesterday's losses very shortly if we can manage to get above there. Yesterday's high was 23.42, so if we break above there, then it opens up the upside. Again, measured move target for that inverse head and shoulders formation is just below $25. Copper has didn't have a great last 3 days, really negative closes, but today we're looking to post a bullish hammer if price action continues to be positive. We've got the crossover on the 55 and 100-day moving average, and it's moving up sharply towards the 200-day moving average, but that's what caps the market at the moment. That comes in at 387, and we got resistance all the way up to 396, which was the swing high on 14th of November. On crude oil, a positive day yesterday, but on the back foot this morning. We're retesting the bullishness from yesterday's Monday start of the week. Support coming in around about 73.42 on WTI crude oil, and resistance clearly marked by the high for the last 2 previous trading days at 76.50. Above that, 77.80. We are below the major moving average lines, so we are negative. We are still in a bearish trend, but some short-term positive price action for WTI. Same for Brent, different levels obviously because it trades at a premium. It's trading at a $4.60 premium at the moment. 78.69 is the low we've got to watch. If prices manage to be supported there, then we remain slightly more positive, maybe with an ABC correction higher. That should run into resistance in the shape of the 55 and the 100-day moving average and the previous swing highs. So resistance to watch, really, a break of 83.15, and that should open up the upside. And natural gas under pressure, as we thought yesterday, broke back down from this. Almost looks like an island reversal formation, but we've had a couple of those near misses. Each week seems to be a different story for natural gas. This feels like the bearish week. Overriding formation that we're looking at is this head and shoulders formation. We have got the 100-day moving average crossing over with the 200-day moving average, which will be negative. Also, 55 is already below both of them. And we had the crossover and the spike higher, and it does feel like the pressure is on natural gas at the moment, but I'm sure there's a few little news bombs that can put the woolies under that move. But let's take a look at the dollar price action. Really, that drives a lot of these natural dollar-based markets. So
yeah,
Joe,
indeed. Okay, we'll take a quick look at the majors, and then obviously there's some more glaring moves that I want to pay a bit more attention to today. Just bring up my charts. Hang on a second. Okay, dollar index, but as you can see on the right hand side in the watch list, there are some major moves here that we'll get onto in a moment. So first of all, dollar index still got this head and shoulders top overshadowing price action, still looking for lower prices here, still trading in a short-term downtrend, as we can see here, a sequence of lower highs and lower lows. Potential maybe for some sort of ending wedge to form here, but it needs to do a little bit more work before we can get too excited about that. So you can see prices contained within a wedge here. It looks like every time we get rallies towards the upper end of this potential wedge or this right shoulder that we've got drawn, it does seem to attract sellers, and therefore we are still looking for lower prices. We've got this 50% fib level at 102.15, so that's the first level that we're looking for on the downside. But of course, if it does break out of this wedge to the upside, then that may indicate that we're going to get a bit of a corrective move higher. Looking at euro US dollar, we can see that continues to stall into these major bands of resistance that we've got. We posted an indecision candle yesterday, and it looks as though we're doing the same again today, obviously very early in the session as things stand, but some support is being found at 105.95, and providing that holds, then maybe we will see higher prices, but there is a fair amount of resistance here that needs to overcome before we can get excited about a continuation higher. So we're going to move on. Actually, let's take a quick look at cable first of all. So we can see that's still rejecting from major resistance at 124.30. We got this big reversal candle last Thursday, and over the last two sessions, we've seen a fair amount of indecision, potentially pulling back towards this support level we have here at 120.30. So all in all, that does look to be in mild corrective mode. So not sure there are too many opportunities on that at the moment. If we get some reversals around this level, then maybe that'll be an indication to hop back on board with the trend. But I guess a lot's going to be dependent on what happens with that dollar index chart. So the Bank of Japan yesterday, some obviously wild moves we've seen in a number of yen currencies. Let's take a look at Aussie yen first of all. We can see here that this has been forming what seems to be a head and shoulders top for a number of weeks now, or months in fact, going back to May earlier this year. Price action has been very sideways, and finally we've seen a breakdown through the neckline of this pattern at 90.82 to complete that pattern, and therefore it looks as though we are going to be heading lower. So we can't rule out the fact that there may be some sort of corrective move towards the neckline to retest that before then an eventual move down to the measured move target, which is 83.06. So certainly looking very bearish there. As we know, the intervening moves from the Bank of Japan previously haven't done a very good job at sticking, but maybe this time it's different, Steve. Maybe we will see finally a big bout of yen strength as a result of the move that was made yesterday, or overnight, sorry. Let's take a look at euro yen. So potentially forming a head and shoulders here as well, an upward sloping one. So not overly convinced by that. You could argue also it's a double top potentially. This being the first top, this being the second, this being the neckline at 140.76. We are trying to break below that at the minute. It's not overly convincing just yet. And obviously we've already seen a pretty sharp move lower. It's down by over 3% as things stand. If that does indeed play out, then we would be looking for lower prices to maybe in the region of 133.07. And as we can see here, there's a major band of support in that region as well. So that would be a pretty nice pullback to play there. Let's take a look at sterling yen, see what's happening there. It looks as though it's topped out, been range bound for a few weeks now, potentially double, triple, quadruple top that's formed here, breaking down through that neckline at 163.02. And that would suggest that we are going to see lower prices here as well. And if we take a look at dollar yen, as we know, that's been trading in a bearish channel. And as I've said on a couple of occasions recently, this has been my favored pair to play on the downside when it comes to going short of the dollar index or looking at short dollar trades. It's rallied into these resistance levels here at 137.70, failed to get through there, been capped by this downtrend channel, and then we've seen a really aggressive move lower. So that's fast approaching our first downside target, which is at 130.150. So into that region, I would expect there to be some sort of speculative buying support or people taking profits on shorts. So I'm not sure that there's too much downside available in that in the coming hours. Be interesting to see what sort of reaction, if any, we get at that 130.150 level. That's pretty much it. I think we can take a look at maybe some of the others. Look at CAD yen. Big breakdown there. This was trading in what looked to be a bearish flag pattern following the break of this top pattern, and we've seen a big continuation lower there. So that's looking pretty nice from a technical basis. Not sure I'd want to jump on board with any shorts now. Looking at where the next levels of support are, the only one I can really see on this chart is down here, which was the highest that we posted in October 2021. So that looks like it is potentially going to keep going on the downside there.
Feels like a bit of a vacuum trade there, Joe.
Yeah, quite possibly.
Like
Let's have a look at some volume profile, shall we, and see if this see if that backs that up. So let's go from these lows here in August to the current day, and yeah, look, no trading there whatsoever, Steve.
Yeah, I like that. I know it's sort of like when you see a break and you sort of think, oh, it's too late to sell it. Sometimes it's not, especially when you sort of see charts like that. That's there's been no trading, no volume taking place between that band, and that's the sort of like levels that you can, you know, get sort of very quick reward from. Not always, but just I'm saying that's for me, that's when you want to be selling into it. If you had a big load of volume around those levels, then yeah, I would be more nervous about it. Have you covered Aussie dollar, Joe?
Yes, I have. Yeah. Do you want me to go back over that again? Someone asked.
Just quickly. Ali Abbas just asking about it.
Okay, let's take a look. So this is Aussie yen. Looks to me like it's formed a large head and shoulders top pattern. I've been talking about this for a while, waiting for it to complete. Price action has been pretty choppy within this phase, but we've seen a major move down through support at 90.83 today to complete that head and shoulders top. We now have a measured move target from the head down to the neckline, projected lower, that comes in at 83.06. So looking for much lower prices on that. Just have a look at, Steve mentioned that vacuum trade on CAD yen. Let's see if there's something similar going on here. Going to go from those lows to those prices. We can see that most of the volume's been traded up at these levels, as you'd expect when you get this kind of distribution of price. So the price, well, the sort of key anchor point for the market is up at those levels. But as you can see here, there's been barely any trade taking place here, down to almost next to nothing in these regions. So it does look like it is a vacuum play, and we are seeing prices just slide lower as a result.
Nice.
We do have some support there at 86.25. That's a previous high from back in October. So prices could easily continue lower as a result of the Bank of Japan move that we've seen overnight.
Excellent. Thanks, Joe. We'll take a look at indices now. It's funny, isn't it? I'm sort of like, I'm the big bad bear when it comes to indices, but when you have this really sort of weird period, it feels like a weird period. Maybe it's just for me, but the sort of like, it's been negative, but it's been just after a sort of like a decent rally. I'm sort of a bit nervous about getting short of it, and I'm actually looking for places to get long. Now, the Dow is the one that's confusing me, and it has confused me quite a lot. I'm not going to lie. We had this downward trending resistance line, and we've just broken back below it, but we've got the 5,500 and 200-day moving average levels around this area. We've just bounced off the 200-day moving average. So for a short-term play, that might be a good thing. But after the sort of reaction I'm seeing in the China and the Asian Pacific regional indices, I'm a little bit nervous about this one. This could be the start of a little bit more of aggressive down move. But turnaround Tuesday was always the key phrase that we used on the floor many moons ago. And so I'm a little bit, I'd like to stand back and watch this one today, but obviously we got gun to the head, so I'm not allowed to do that. So anyway, we just bounced off there on the short-term chart. Just even break down to the hourly chart, we can see a little bit of a morning doji star formation formed. Nice little rally up to this previous support, now turned into resistance, and it held well. So, and a bit of indecision on this hour. So they're probably waiting to see what I do before the market moves further. The NAS 100, similar sort of formation. It's bounced back up, morning star formation, but doji candles to follow. So a little bit of pressure on there, and the same with the S&P. The market that was really going to look at over the last few hours. Let's see if the 4-hour chart, actually the 4-hour chart shows it better. Had this nice little uptrend, little bit of sideways distribution, like Joe's mentioned, that we've sort of seen in the yen markets, and now we've broken back below the Ichimoku cloud. So very negative candle, aggressive break of the 12,950 level, and we're on the back foot. So we've been down as low as 12,670. Yeah, that's right, 12,670, and just bouncing a little bit from there, so a little bit of a reprieve, but it looks pretty negative. Hang Seng hasn't quite broken that cloud support, so still in an upward trend as far as the cloud is concerned. Aussie 200, a much more negative ABC correction playing out really nicely. Take a look at the DAX. That's been under pressure, broken through the cloud at these this sideways distribution you see here, that's what leads to the cloud looking like that. This is like a forward-looking resistance support area. We are in a slight downtrend on the 4-hour chart on this as well. Nice candle between 3 o'clock and 7 o'clock this morning. A little bit of a stall in price action now. It feels like a decision time for us to run into the US session. The European session this morning might be a bit choppy, I think, not really giving me any real clues as to really where to sort of like put my hat. We've got support coming in the FTSE from the low from the 17th of November. That's not far away. We've stalled in front of there. Price action just bounced, but it's undecided. A nice little head and shoulders formation playing out in FTSE. Let me just highlight that. Take it from wherever, just to sort of give you an idea. That's the type of, it's not a classic looking head and shoulders, but it does the job. The neckline for 7,421, which we broke below last Friday, and we've come back, almost retested it, and then extending lower. So measured move target for that, we can bring it up quite quickly. Oh, measured move target for that has moved to 7,223. So what's happened to the Santa Rally? I don't know. And even more
Looks
so,
like it came a bit early this year. It was early on in the month, didn't it?
There could be a good Christmas joke in there somewhere, Joe.
Yeah. Keep it clean, Steve.
Right, I think that's it. Covered off those. Maybe we'll have a little go at our gun to head.
Just before we do, Steve, Ali actually asked for Aussie dollar rather than Aussie yen. So I just want to give that
I said Aussie dollar.
Yeah, you might have done, but I went back to Aussie yen again. I misheard you. I was just got yen on the brain today. So let's go to this chart again. So it looks as though it is trading in a downtrend. We can see that there is a sequence of lower lows and lower highs, but we did see this bottom pattern form on the daily charts. We saw a nice break up from that, hit the measured move target of the head and shoulders bottom. Looks as though prices then formed a wedge pattern, which we then broke down below on Thursday, the 15th of December. And now prices are trying to recover that and get back above that line, but are failing. So they're selling into the underside of this broken wedge formation, and it looks as though we are set to remain in corrective mode. So I'm looking for a pullback to test the neckline of the head and shoulders bottom, which is around 65.22. So my preference would be to trade that from the short side at the moment towards those levels, and then look and see what happens around there, whether or not we can confirm this bottom and potentially start heading higher over the longer term. So that's my take on Aussie dollar. Hopefully that was helpful. Ali, anybody else needs any markets taking a look at, then please feel free to post them up and we'll do our best to cover them. So back to the gun to the head challenge, as Steve mentioned. So this is where Steve and I pick trade ideas live on the video as if we had a gun to our head. What do we trade right now? We come up with these ideas pretty quickly, and we have stops and targets on each of the ideas we come up with. They're all placed at market, and we run them between now and 9 o'clock UK time when we just close them out for the sake of record keeping. We just cut them off at that point, regardless of the outcome. Of course, if they hit the stops and targets before that, then they get marked down at that level. So yesterday, 2 trades from Steve and I. We were looking at Dow. Steve was looking to buy, hoping for a Santa rally. He noted that there was a golden cross on the daily charts, which is where a shorter moving average moves above the longer one. It was the 50 and the 200, I think you were looking at from memory. And looking at an inverse head and shoulders potential setup here. Sadly, that didn't work out. There was more pressure for equities yesterday, so that continued to move lower. I was looking at Aussie yen, and I was actually buying it, looking for a swing failure here. So it tried to break down below these lows that we posted on the 4th of December and failed. So I was looking for a bit of a bounce there, and it moved quite nicely. It would have actually hit the target had we left them open longer to 1 o'clock in the morning, but thank God I didn't leave it any longer than that, because then obviously we had this absolute collapse as a result of the Bank of Japan. So yesterday we made 2.3 R on that. At 9 o'clock. It was nicely onside. So yeah, we'll take that, take our cash and run away as fast as we possibly can from that one. Yeah, move on to some new trades today.
Anything what a good idea that is, to close at 9 o'clock, Joe. It's amazing,
it's almost,
isn't it?
Yeah, perfect. You got anything up your sleeve today, Steve?
I haven't, but Emisoft 2005 has just asked about natural gas. So let me just take a quick look at that, because I could go for natural gas because I'm really confused about everything else. Gold, I'm sort of thinking it's right pivotal level. There's a argument for both going long and short of that, so I'll leave that alone. Indices, same sort of story. Natural gas, as we said, it's been spiky. Let's call it spiky. Overall, the formation is negative, this head and shoulders formation. It will be confirmed by a break of 533. That hasn't happened yet. So until then, we should really remain quite positive about it, but we're getting the crossover from the moving averages. So that's a bit of a concern. The 100 is crossing over with the 200-day moving average. That should play out very well in the next few days. So that's overall, we've got some negative things going on. The 4-hour chart is also negative. It broke back below. We had this spike lower, luckily, on Friday around 11 o'clock to 3 o'clock. And that allowed us to fill the gap, basically, from Monday morning. It's been negative since Monday morning, and we're just pushing down in the last hour. We're breaking lower again. So I imagine we're going to get to these lower levels, and it's quite a key support level. So let's go with it, Joe. It does look, if you squint really hard and you didn't have this, you know, that these levels where they were, that it almost looks like an abandoned baby. So it's had that attempt higher for that week, and it's failed miserably. So I'm going to go short on natural gas. I'll blame Emisoft if it doesn't work, but let's get some levels on before it does collapse. Like the stop, I'll put it above the last hour's high and a little bit higher than that, around about the 580 level. So I'm getting short at 550. Is that right? 557. I'll just round it down because I don't like. I'll give a little bit back. 587 stop. That works for me, and I'm going to go for it. I'm going to go for the break. Let's go for the break, and we'll sort of see that reap decent dividends. Going for the break of the neckline, which would be a really key break. As you can see, this is solid support. So if we do get a break there, then it should be pretty aggressive. So that's my trade idea. Selling at 557. The target is 467. The stop is at 587. So I've got a 30 tick stop, a 90 tick target. Risk reward of 3 to 1.
Happy days. Good luck, Steve. I'm going to take a look at XRP. Not one I generally go for. I tend to kind of stick to the FX markets, but I was just looking at this today, scanning through my watch list, and I can see that Bitcoin and Ethereum are up quite nicely. We've got Ethereum up 3.3%, Bitcoin up 2%, but XRP is lagging, only up by 0.7% as things stand. So then I drilled into the charts to see if there's anything interesting there. As we can see on the 1 hour, we are trading in a sequence of lower highs and lower lows, and we've just seen a bit of a rally to retest some resistance that we've got at 34.44, and we seem to be reversing lower. So I'm going to sell that at the current price of 34.12. I'm going to go with a fairly tight stop of 64 ticks at 34.75, and I'm going to target a move down to 32.74. I picked a level out in here. So the high just before this big impulsive candle that's posted back in November. So that's going to be the target on the downside, giving me a risk reward ratio of 2.16. So just readjust that target, actually is at 32.76. So that's my trade for today, looking for a continuation lower in XRP. So we'll get that published up to the TradingView profile, and if anybody wants to check it out, feel free to do so.
Lovely.
Okay, data-wise today, let's have a look what we've got on the calendar. I don't think there's an awful lot, but we've got US housing starts at 1:30 UK time. Then tomorrow we've got the US consumer confidence number, so that'll be a bit of a biggie that may create some volatility. But in terms of high impact data today, it was all about the Bank of Japan meeting that happened at 3 a.m. this morning. So I think that's pretty much it. But obviously the fallout of that is likely to mean that volatility may stick around for the rest of the session. Okay, I think that's it, Steve. Wrapped up in 30 minutes. Felt a bit more exciting today with some big moves in markets.
Yeah, very nice. Let them continue.
Yes, indeed. Okay, have a great day, everybody. Thanks for watching, and we'll be back tomorrow morning.
Yeah, cheers.
Bye-bye.